Paul, one of the other big moves we have now in this huge shift of market dynamics the last week is copper off of the lows, Freeport-McMoRan off the lows. We just talked about a few other things. What do you see in the commodity space as confirming or casting doubt, or how does it fit into the overall narrative of this big shift?
Yeah, it's interesting when you take a look at copper's move. It's been under pressure for many years, finally bounced off a 3 up to, or off a 2 up to a little over 3. We got a 50% retracement, and that's really where we're bouncing here. So from a technical perspective, it looks good and could make it back up to 3. Certainly copper is one of the things that we take a look at for economic activity. As activity picks up, especially in the housing sector, we see copper pick up. So it's an underlying theme for us that maybe the economy isn't so bad. Recession may be further in the future than most think. And maybe the economy is doing a little bit better than most think. And part of the reason why we're seeing interest rates back up here, and we're seeing some of the economic data come in a little bit better than expected.
Now, Paul, there is a little bit of precedent for this. If it indeed is a head fake recession, and not a real recession, you know, 15, 16 similar, 2011 debt crisis similar, where we had some of these. In fact, the long-term chart of the 10-year that I've loved to bring to the technicians who say you can't do technical analysis on yields. I mean, basically, we bounced right off of the 16 low.
No, this is a third time we've knocked on that floor. And so far, at least this week and last, proved it's unsuccessful getting through that floor. So you're right. And again, I think some of that's got to do with the retail sales numbers that we saw this morning, at least from a short-term basis, and in the inflation numbers that we got earlier in the week, running a little bit hotter than many expected. So again, the backup in yields, I think, is real, at least through the end of the quarter. We'll have to see what happens October and November when we start seeing a little bit less issuance coming out, and if we get that yield pushed back down again. But at least right now, you know, we had a huge move, similar to what we talked about in a lot of the other asset classes. This was definitely the momentum trade. A lot of air is coming out of that bubble right now. So,
I mean, where do we look for, you know, signposts along this road? Because even though we have a history, you know, of these head fakes, no fake did our head move this hard, Paul. I mean, to figure out where we go after this, if the market got it wrong, I mean, should Jay Powell be watching the bond market right now going, why the heck do I believe this thing? I don't need to cut rates. I mean, how many more days of selling in bonds do we get before we have to start thinking about no cut?
Well, I think we're there. You know, certainly I think the data this week, I think, supports that. I think the cut is coming next week. They're going to cut rates. But again, it's extraordinarily unusual to see a Fed cutting rates with stocks near all-time highs, you know, within a percentage point. But I think the Fed will probably sit on their hands. We heard that from a lot of the Fed governors over the last couple of weeks leading up to their quiet period. They were a little bit more on the hawkish side and kind of more of a wait and see attitude. So I think that will actually be part of the discussion and part of what we hear from Powell in the press conference. So more than the rate decision itself, I think the press conference is going to be very illuminating.
Paul, one last thing. Thanks for playing ball with us still here. How close does the, you know, to Powell, to your point here, if the market still has this inverted yield curve, then it seems like he needs to cut. But we're like, you know, the 10-year and the 90-day is about to uninvert itself.
Oh, that's right. And, you know, and actually the odd part of that, you know, let me flip that around completely. The odd part of that is the uninverting of the yield curve is usually the signal of a recession. So it very well could be that we're there today. So it's something to keep an eye on. But you're right.
Or it was a big swing.
That's what I think.
Or it was a big swing in bonds, basically.
It's a huge swing in bonds. And I think it's a huge swing in investor sentiment as well that, again, inflation's a little bit higher than we thought. Maybe the economic growth a little bit better than we thought. At least the U.S. has proven to be the island in the storm around the world. Certainly that's not going to play well in the White House, but I think that's what we're going to see here is a quarter-point cut, and then maybe they sit on their hands at least for the next meeting.